construction loans. If you've built your dream home rather than buying an existing one, it may surprise you to learn that you won't be getting a traditional mortgage. So, you know, a construction loan is a higher interest, shorter term loan that's used to cover the cost of building or rehabilitating your home. So it can be used when building a new home on an empty lot. If you're finishing a half-done construction project, the idea is to use a construction loan to complete your project, complete the project and pay off your new construction home. So check with your lenders, as different lenders will have different fees and lending parameters. There's an approval process that is looking to approve your project as well as you as a borrower. The appraisal is done based on the value of the home once it's completed. That's a bit about the process, but here are some pros and cons of a construction loan. It goes through the different types of construction loans. Just for simplicity, we're just not talking about specific types of construction loans, but just new construction, short-term, high-interest loans. So how construction loans work. The traditional loans are paid out by a mortgage company to cover the cost of the home in one lump sum at closing. In contrast, construction loans are paid out in installments. A bank will pay the builder as various phases of the building process are completed. The total cost is transferred to you once the entire project is finished. These installments are called draws. Each draw reimburses the builder for the cost needed to cover that phase of building, meaning that they or you have to have enough cash on hand to cover these costs up front. Before each draw can be made, the bank will do an inspection to verify the estimated cost of the current phase of building, as well as how well the builder is moving on their projected timeline. Since the financing of a construction loan is so variable, it's crucial to work with a good builder. You need someone who's experienced with budgeting and scheduling and who has the ability to work well within those limitations. Make sure you do your research before applying for a loan. Helps be part of, to be connected in a network with where people can make those recommendations for you. So let's look at some of the pros and cons here. So the benefits of a construction loan: they're interest only during construction. So monthly interest only payments are made on the amount that has been drawn for construction. So for example, let's say you pulled out of a draw $40,000 at 12% interest. You would only be it would be interest only monthly payments on the amount that you're pulling out of the construction escrow. So the amount of work that you're doing, those construction costs, you're paying monthly interest on that, as opposed to paying interest on the lump sum of the entire loan amount. That would be much higher. So it's much more affordable in that sense. So yeah, this sums it up pretty well here. During construction, you'll only be expected to pay lower interest-only payments on the loan, giving you more time to save. Again, you don't have to pay it on the entire amount. You're paying on the interest-only payments on the loan. They have flexible terms, although you need to provide the bank with specific plans for your project. Construction loans offer much more flexibility in terms of loan terms and guidelines than traditional loans do. To a certain extent, you'll be able to work your loan terms around your needs for the project. The added scrutiny provides structure. Though added scrutiny may not seem like a good thing at first glance, during the building process, it can actually ensure that your project stays on budget and on schedule. At times, there can be stricter lending parameters, but that's with not only the lender protecting their own interests, but their own self-interest and covering themselves as the lender, but also looking out for your project and making sure that your bases are covered, that you're on budget, that you're on schedule. So those are some pros. Let's look at the cons. It can be harder to qualify for. So since construction loans are so flexible, they often come with higher qualifying standards. That can be with credit. Sometimes they'll look at experience. That can have something to do with it. Someone who's done 0 home builds could probably, their rate would probably be a bit higher than someone who has done, spec builds for the past, 5 to 10 years. So they say typically here at least $680 a down payment, at least 20% needed. That can vary from market to market, lender to lender. So they have higher interest rates. Construction loans typically have variable interest rates that correspond to a certain percentage over the prime rate or the rate that banks give their customers. And shorter term loans are a risk, especially if you're going for a construction only loan. At the end of the loan term, you will need to pay off the loan in full. If you're going this route, make sure that you have a way to pay off the loan, even if your original financing falls through. So yeah, those are a bit of the pros and cons on loans. And let me know what you think. Take care.